is Justin Pulitzer. This is my midweek video for Wednesday, April 6th, 2022. I can't believe we're already in April. Time is just flying by. I guess time flies when you're having fun, right? So a lot of material to cover, even for a midweek video. Let's jump into it. As far as sentiment goes, we had been down pretty weak into the non-farm payroll number. And then we rebounded basically back to our prior levels before that. But it's still underwater and sentiment is still not so great. I would imagine it probably improved on Monday, and then after the Tuesday drubbing is probably crappy again. A little bit of a lower turnout the last couple of polls. I don't know what's going on with that, but if anyone cares to comment on what that might be about, I'd be curious to know. As far as the CNN gauge goes, I hate this new setup they have. I like their old look much better, but that's neither here nor there. Their prior read was 46. We're back to 46. A week ago it was 51, so a little bit of a back off. Although a month ago it was 21, so an improvement there. But what was the line from that movie with Johnny Depp? You know, when it's compared to room service, I guess it's quite serious. You know, it's a funny. That's kind of what I was thinking about. I forget what that was called, The Tourist or something. It was with Angelina Jolie. It was very... Anyway, as far as the economic calendar goes, we got some trouble. First, we got slizzammed on Tuesday by Lyle Brainerd, who's usually a pretty dovish Fed member, and she's going to be very important because she's going to be the Fed vice chair. So when a dove turns to hawk and they increase in stature, it becomes problematic. And then to make matters worse, we're going to have Fed minutes on Wednesday, so I would imagine they're going to be pretty hawkish too. I think we were going to get smacked on Wednesday if we were up into the number. Now that we're down, we'll see how bad it might be. But the Fed minutes are going to be hawkish. I know a lot of people think that the Fed was sort of a nothing burger when they came out as hawkish when Powell raised rates, but we had end of quarter markup, and I think it disguised a lot of that weakness, and now we're going to be going into that more full-throatedly. And then on Thursday, we got Laughin' Boy Jim Bullard, who's going to make headlines. I'm sure he's going to be super hawkish. But what I'll be paying more attention to is Williams, because he's the New York Fed prez. Not such a bright guy, but he's obviously important because of his position as the New York Fed, and that's at 4:05. So it'll be after the close. But and then Charlie Evans, of course, who I don't think is so bright. So we're going to have kind of like the not-so-bright guys speaking on Thursday with one important not-so-bright guy after the bell. And then, of course, the minutes. We'll have to see what that's about. I was also looking... We had discussed about some problems we may have coming into the calendar. And by what I mean by calendar, I mean by just the regular calendar. We have a couple of big things. We have a big number coming in on the 12th. That's going to be our next inflation read, so that's next Tuesday. And then, of course, we have tax day next week. So those technically usually tend to be a little bit seasonally weak. I actually was looking around. I forgot I had this chart, but remembered right before I recorded, and I pulled it up. This is from a few years ago, and it was a study done by Deutsche Bank about when the buyback blackouts happen. They ramp up kind of toward the end of March, and then they peak late April. So, you know, we got the high inflation read coming in that we're going to be worrying about in the next week or so. We got the Fed minutes, and we're going to have buyback blackout period. And, of course, tax day when people raise money. And I had mentioned this to you guys the last couple of weeks that I was, you know, encouraged and bullish into the end of quarter, but was a little worried about that afterward. I put up a couple of posts. People were asking me, you know, for some reason, and I guess I'm indulging it a little bit because it gets, you know, retweets and likes and so on and so forth, and I guess it's important to keep a macro view, but the truth is, price is really what really matters, but people are always wondering why every move happens. I guess it's the human nature to understand the reason why. So yesterday on Monday, subscribers were asking me why the market was rallying. My answer was that sentiment coming into Tuesday was still poor. Many waited until today, meaning Monday, into Monday, to do Q2 allocations. Remember, the quarter flipped on Friday, and you got some of that money, but I think a lot of people waited until they could get out of the weekend risk, and then they did it, and then the big risk on signal was Musk's tweet about buying a big stake in Twitter. And I also think the market may be sniffing out a Ukraine deal, and if that happens, I would expect that to be a very large pop in the market, and probably one that's sellable, because remember I had said buy on the cannons and sell on the trumpets, and that would be the trumpets. So a lot of people were asking me again today, some of the same people, some different, why the market was down, and I put out a list. It was a little bit of a longer list, and I said the market had been up a lot into the end of the quarter. A lot of people chased the run late and got their stops run, which is likely what happened. You raise your stops, you get them run, and then that triggers more for selling. Q2 allocations on Friday and Monday burned out. And then really, this is what I think did it, was Brainerd's hawkish comments. And then, of course, you didn't have Elon Musk to, buoy the Momo stocks. I also added in transports were in free fall, which has everyone talking about recession. The bond yield was pumping up again, the long end of the curve. So I guess the inverted yield curve situation is abated for now, but it still happened. And I guess the clock started, but usually it doesn't last that long. But, once it happens, it's sort of the die is cast. And then, of course, the anticipation of the hawkish Fed minutes, especially after Brainerd, did her thing. So I guess you have Musk on Monday and then Brainerd on Tuesday, and that's what took place. This chart I'll tweet. I'm sure people are going to ask me for it. I already know what you guys want to know. So I will put that out there after the video. All right, let's get into a couple of more things. As far as COVID goes, it's on the back burner for now. China also on the back burner. The Fed is very much on the front burner, particularly with Leo Brainerd, and then the Ukraine situation seemed to have heated up again. You got to just see how that plays out. I do eventually think that that's going to wind down. But, it's a very ugly situation, and, there's some very nasty videos and imagery that is coming out of that, and, it has its psychological impact, and then it also, keeps the supply chain issues going. What I'm going to be most curious about is on earnings, how market dynamics play out. Meaning, do stocks that have good earnings that beat when they rally, or even if they do rally, or do they not rally? Do they have good numbers and they can still go down? But do they have pops that last, or do the pops get sold again? And then do ones that have bad numbers, do they crash and then continue to crash like we saw the last earnings season? So I'm going to assume that's the case until it's proven otherwise. Just saying. I think that's the safe. It doesn't mean that I really think that that's going to be the case, although I sort of do. But we'll see what happens there. Let's get into some of the charts. As far as the VIX goes, excuse me, allergy season is kicking. Actually, I should have mentioned this. Thursday, I'm not going to be on the stream much because I'm actually going to see an allergist. So, morning I'll be around, but the afternoon not so much. VIX had sold off after the end of the quarter. And I guess the Brainerd comments today and being near kind of the range low, and this area I had said I thought would be a little sticky, found a bit of a bid. It really kind of got going late in the day. It wasn't so much all day. And we'll see if that can sustain. We're kind of right up near the recent range high, whether this just kind of chops, whether we get a push lower. But it's kind of low enough at this point, given the Ukraine situation and the hawkish Fed, that I don't necessarily think we're going to see the lower teens. And if we do, it's not going to be sustainable for very long, in my opinion. So this area seems to be acting 18, 19s, 20s, seems to be like the new 14, 15, 16, 17-ish area. Okay? So that's what I think's taken place there. But, that being said, VIX did get a little poppage, and that's not so good for risk assets. As far as the bonds go, I think this is what was one of the real things that got going, and I had mentioned this in my tweet. We were looking like we had the potential here for a bond rally, meaning lower interest rates, which is great for Nasdaq. We had the little dub steps set up here, right? The big body candle inside Harami, but we couldn't get over the 20 MA or the downtrend, and we had a pretty nasty candle back to the downside, down to the recent lows. I'm sort of thinking we could potentially, if we do get a hawkish enough Fed, maybe come back down to the 2008 crash top. This, by the way, was when the world was ending. This was the high of bonds. So even with this like pullback or whatever, the move off the highs, we're still so much lower in terms of rates than we were back in the 2008-2009 crash. But could we eventually work our way down with a hawkish Fed to the channel low? It's possible. It took its sweet time back here, but with some fits and starts. But we eventually got there. Maybe it's going to happen. I do think it's possible we see 3.5% interest rates. That would impact dividend attractiveness. So very key spot here, and I guess we'll see how this acts tomorrow on the Fed. I'm keeping an eye on for a look below and fail, or if we dump and go, or just rally. We'll see. As far as TNX goes, this is the 10-year. Oh man, back strong and into my pocket where I thought it would go, and it did. And we're into some potential resistance. So the big fear, of course, zooming back out, is if this just keeps going here and we get up to the 2 times range. If this starts going like parabolic, this will be terrible for Nasdaq. If you get one of these kind of moves where it's just up and away, which we've seen, any reprieve in that has been good for the markets. But if this sustains and continues, it's not good news. So remember I said back here that this was the nightmare chart, and it's turning out to be, for equities it's a nightmare chart, because higher rates is not good for stocks, PE multiple, premium, and expansion. But it's definitely in a bullish trend here, and we'll have to see how that continues. The dollar is acting pretty strong again. I had said I thought that this short term would be, even though I do think the movement potentially off the petrodollar could longer term be problematic, but it's still hanging up high and tight. And to really start getting too bearish, I guess you had a pretty big range today. I'm just looking at this. If you lose the 20 MA again, I think the dollar's got issues. But here we saw that eventually it broke. But above the 20 MA, the bulls are still in charge, so just keep that in mind. As far as Bitcoin goes, Bitcoin, everyone talks about it as an inflation hedge. I think it's more of a hedge against a tyrannical government, but it's a risk-on asset, and it's not, one of these safety trades like gold often is attributed to. And I'd even be willing to fight that as an assumption. But it's kind of had a pop, got into some resistance, and it's just kind of bleeding off here. You need to see it start going. If crypto keeps pulling back, that's not going to be so good for NQ, Nasdaq futures, right? It tends to lead the futures, and we got a bit of a triangle forming here. So I'm thinking that maybe it's a buy closer down to the 50 MA if we get down there, and then we'll see. Maybe the 20 MA holds it or whatnot, but the 50 looks like it's lining up with the trend. So the bulls need to get over the 200 MA, which had been some resistance, and over this little interim downtrend for a move up to the 53,000 area. If not, we could just keep chopping or pulling back, maybe for a move back down to like 41,000s. As far as, just going to take a look at Coinbase, because, look, Coinbase correctly or incorrectly trades with Bitcoin, and it has the potential here for an inverted head and shoulders. And I drew this little shoulder here before it even pulled back. So keep an eye on Bitcoin and keep an eye on Coinbase. It looks like it's pulling back. Could it pull back a little bit more? Yeah, maybe. If it gets back up over the 20 MA and the 50 MA, would I try it long? Yeah, sure. But until that happens, I'm thinking maybe a little bit lower, but we do have a potential inverted head and shoulders here forming in Coinbase. Let's take a look at oil. I've been using the pops in oil to sell out of my, I think I'm out of them all now, actually. Sell out of my energy stocks. My thesis was that this would be strong for Q1. I sold a lot of them a little too soon, but I just got rid of my last one, I think, today, which was Enbridge. I do think Enbridge, oddly enough, could go a little bit higher, but I was not loving the way it was trading. It was starting to underperform oil, underperform the sector. It's got a good dividend, and I do like it, but my thesis was that we would peak in Q1 on oil. And until I see otherwise, meaning a move over to the 20 MA, a move over the downtrend line, I'm going to operate as if. So right now, the 50 MA is support, the 20 MA has been resistance, and we'll need to see which one breaks first. The 999.55 is currently the 50 MA. 20 MA is currently 104.79. So I had sold some, the last couple days here. I've been, actually I sold this near the high of day, right at the 20 MA, where I dumped the stocks. Was that a coincidence? I don't think so. When you know the levels and you know the charts, you have a nice little leg up on a lot of traders. Now, this has been a big story, this crashing transports, and JB Hunt is a big one I watched, the truckers. Kramer actually reported that he's said that rates were falling and some demand were falling. Not good. It doesn't surprise me that higher prices of goods has caused some demand erosion. So no surprise here, but transports collapsing could be an early indicator of a slowing economy. And look, you have this big push up here, almost a Maribozu-like candle. I'm going to show you how you trade these kind of things. So let's say you were long JB Hunt or you chased it or whatever. You had the inside dubstep here. Once you lost that low, it took a couple of days, but price never really recovered. So that higher low became the stop. And look what happened. Boom, boom, boom. Risk happens slowly at first and then all at once. Now we're down to the range low. We filled the gap. So I'm not that bearish on JB Hunt here as I was, maybe on the first day. Although I didn't say I know for sure because no one ever really truly knows for sure. But I was talking with some DM service subscribers who were asking me about this and were asking about buying the dip. And I said I'd wait because day one like this, a big, shut off pattern, meaning buyers are all shut off, doesn't end usually in one day. Now down here, I'm starting to warm up to a little bit with the gap fill. Could it go lower though? So a couple of things to note. Money flow is oversold here, but we are coming into earnings. So do I want to really be a hero in front of the number, given the fact that my thesis is that we could continue crashing? I don't know. So I'm probably going to wait. Would I take a day trade over the Tuesday high for a bounce to the 200 MA? Yeah, sure. That's no big deal. But would I buy this and be, long and strong into the print? I don't know. Everyone always says to me, they think I have like these strong hands. I'm not a diamond hand kind of guy. I'm sort of like in and out. I don't really hold on to things. I don't really have a lot of conviction in anything, other than price. And if it's not going the way I think it should go, like if my thesis is for it should, when something is supposed to act one way and it doesn't, if it doesn't work out, I'm not there. I'm not the strong hands, the Warren Buffett type. I'm, in and out. I consider myself more of a swinger, even in many instances, sometimes a day trader lately, because we're getting such large moves. Like I mentioned to you a couple of weeks ago, I got into Amazon and it was out 300 points later, like an hour or two later. That doesn't normally happen. And did I plan? I had planned, I had my order in, my buy order, I bought it and I had my sell order in, but I didn't plan on it happening the same day. You know what I mean? So it's sort of like when I get my price, I get my price. And yeah, the backside here didn't hold it. The 200 MA didn't hold it. Is it getting oversold short term? Yeah. But I don't know that we're going to be, I'm not going to be the hero, who buys it ahead of the number. I want to see what they have to say. If this continues to dump hard like this and we get down to like 155, I'll revisit that opinion. If we come down in a straight line all the way down to retest the breakout, would I try a nibble here? Yeah, I think so. So we'll see what happens. I like it either long, like I said, over the Tuesday high for a bounce to the 200 MA and then out, or a little lower, maybe 163.74, or maybe even down to like 155s, 156s. But this is very bad, and it shows you that, the economy, I believe, is softening. And I do think we get a recession. I just don't know, the exact timing, but probably 6 to 9 months maybe. Interesting if it happens right before the midterm elections, which is sort of what I'm hoping happens. If there is to be a recession, I hope it, happens then. That would be like the perfect timing for, a real comeuppance in the midterms. But that's a whole other conversation. Do I hope we have a recession at all? No. I love the country, and it's not good, I think. And I think, like I've said before, I think the Fed is making a very big mistake thinking that they can, quietly engineer some kind of controlled burn recession that'll immediately come back, when the supply chain ends. I think they're playing with fire. I've told you before in past videos and in tweets, I think the Fed is making a mistake. I think things are going to get worse than they anticipate. And I think that they should be trying to rev the economy to outpace inflation for the short term, doing basically the opposite, and then kind of let it throttle back naturally after the supply chain issues abate. We had a look above and fail in CSX. This is often a canary in the coal mine, and this isn't quite as ugly as JB Hunt, but it's pretty nasty. And you had this like attempted bounce Tuesday, and then it just fell apart and closed on the lows. It's still above the reference breakout, but I wouldn't be a buyer here. I'd maybe closer down to like 33s or like at or below the 200 MA for a bounce play. But again, do I want to be a hero on a situation where we're now making lower highs? Tough sledding there, in my opinion. All right, let's take a look at... And I just realized what it's funny, I realized I had forgotten to do so. I knew I forgot to do something before the video, and I just realized what it was. It was the expected market maker moves, but that's no big deal. I can pull those up on mobile while we talk without, much hesitation here. So as far as the SPY goes, and the expected move here is into Friday's expiration, $6.13. So check this out. Well, yeah, we'll do this first, then I'll show you the future since I started it. We ran up. We didn't quite get the 78.6, but we stalled in roughly an area where we've had resistance before. We had a multi-day pullback. We stopped seemingly before the 200 MA. I would have liked a full check back to the 200 MA, but we didn't, and then we rallied here on the Musk news. So Friday kind of caught itself, and then we had the allocation money, but look where we rallied again to some prior resistance, and then Tuesday we looked like we were going to start to rally, and then the Lael Brainerd comments are really what took the market down, in my opinion, today. There's no other... I mean, I listed to you the other explanations, and I do think they're all valid. But if you look at the timing of the comments and when the market really dumped, it was basically on her comments. So we're below the 100 MA. We're right around this 451.14 breakout-ish area, and we're still above the 200 MA and Friday's low. So I think the bulls really need to get back up over the 100 MA. If we get a weak bounce and we stall at the 100 MA, we got problems because remember, when we've been above the 100 MA and then go below it, we tend to have large pullbacks. So we were here, we went below the 100 MA, we kind of went higher and then pulled back. So the one time framing technically ended on Monday, and now we're back into the pullback. So there's a couple of things to note. One time framing, although I guess you could say, I could make the argument that we did end the one time framing for more than one period, because you can't, what does that mean? It means a prior day has like a higher low and a higher high. So Monday broke the pattern. And then I guess I could make the argument Tuesday did because we took out the Monday high. You can't do it for more than one. So technically the one time framing is over, but that's very small solace given the fact that we had just such a crappy day on Tuesday. There is room for still further pullback without there being too much technical damage done, meaning we could pull back to 445.31 and basically rendezvous with the 20 MA, which was the resistance and then should be support, and maybe even pull back to as much as the 50 MA around 441.11. So this box here to me is the arguable must hold, with of course the 50 MA being the kind of the best case scenario if we were to lose Tuesday and Friday's low. That's where I think we would go immediately. And then that 20 MA really has got to hold. Anything below there and below the 50% fib to me is more problematic. It's more bearish than bullish because that's the divider line, right? The 50% of the entire move of who's right and who's wrong. And if you're above it, the bulls are more right than wrong. And if you're below it, the bears are more right than wrong. So I'm keeping an eye on that. As of now, we're still really close to the 61.8, and we were above it nicely on Monday. And I was starting to think to myself, my thesis was maybe we were going to come up and print up to the 78.6 and maybe even ink a new high. We'll have to see again how the market responds on the hawkish Fed minutes that I am expecting. If we are down, I'm thinking 20 MA. But if we can hold here and we can get and hold above the 100 MA, and more importantly, get back up above the Tuesday high here. I think I'll go out on the limb and say this. I think if we can get above Tuesday's high, I think we get the 78.6 scenario. I'd be very surprised actually if we don't at that point. But if we can't get above the 100 MA and we start sinking and we get down to the 50% fib, that's really the must hold. I mean, if we start losing that, I'm thinking we could come down, and I don't know if we're going to retest the dead lows, but we could come back down and retest quite a way that I think people would would wipe the smile off their face. So I think the Tuesday high is the must clear for the bulls, and to break the Friday's low is the must clear for the bears for the retest of like the 20 MA and 50% fib. All right. So not to, in my opinion, SPY is the one I have to explain the most because, the S&P, I know the media, they always like to talk about the Dow and stuff, but the traders know, you guys know, the SPY is really is the market. So as far as IWM goes, this was starting to look better. Should we do the futures first? Let's do the futures quickly first. So I want to show you what I think took place. You had an inverted head and shoulders here after the pullback, and then you had the breakout here over 455.1.25. This rallied up. It should have gotten the 2 times range. It did in the Nasdaq, but it didn't here. And you had this kind of lower high scenario where we had a look above and fail. I'm sorry, I thought we actually had a bit of a lower high. But we did actually have a look above and fail of the overnight high. Inventory, I guess, got a little long. And then once you lost those opening 15-minute lows, it was just down, down, down. And they just kept on selling it all day long. Every rally bounced and it got sold either to the downtrend line or the 20 MA. And, we're still bleeding lower in the overnight. And it looks like we're going to retest the 100% retracement line down here at 45.01 quarter-ish. That then becomes very key. Underwater close up here at 445.4875. Nasdaq, like I said, the NQs broke out. They broke trend. They broke over this breakout here of the right shoulder. They did get the 2 times range, but then this got sold pretty hard. And I had tweeted out, during the day that this was initially holding, but once it lost the breakout area, it was too much of a pullback. We pulled back, we checked back, and then once that check back failed, we just dumped. So if you want to be in the futures here, well, let's use those breakout levels as the must clears. 14.939, because if the bulls are going to run, or if let's say the bears are going to win here, they have no business getting up that high again, right? To me, that would be like we pulled back too much today, meaning Tuesday, if we got above these levels, this would be too much for the bears to give up. Like it was too much for the bulls to give up, it's now too much for the bears to give up. And then if we were to clear those breakouts again, I think it's a long scenario. And initially, it might resist because we're back up closer to where the VWAPs were, meaning the volume-weighted average price. So price today came down, and I'm going to clarify this for you in a minute, because I have these row longs written in, but I want to just show you the order of operations for them because it's key. So we may come up initially and fail there because the VWAPs were up here, meaning just because price went lower, there wasn't a lot of volume to confirm it, meaning just because the price came down, a lot of people weren't necessarily dumping stocks. It was just like buyers kind of dried up. And I think that kind of became the onus for the moves down. So if we come up initially, it could back off hard, or it could settle in and, we chop sideways. And if it chops sideways, that tells me that there is an opportunity for price to then accept higher above those levels. And then just Tuesday was just a scared liquidation break on Lael Brainerd. And I think we'll know very quickly. The good news is I think we're going to know very quickly after the Fed minutes, which are at 2 o'clock? So after 2 o'clock, I think we'll know, if the market's in full-on dump mode or if it's on a bit of a relief rally, like maybe it got a little too ahead of itself. All right, so as far as IWM goes, and while I was discussing all that with you, I got the numbers for the moves. So we attempted to break into the range here, and the expected move is $4.03. We pulled back, we tried again, and then failed. So I'm going to keep it really simple. The 50 MA was the old resistance. It now better support. Could it overshoot a little to the backside of the old trend line around 199, 200-ish? Yeah, but in general, it's really got to stay above the 50 MA to stay healthy, okay? So 202.99. And once again, $4.03 is the expected move. As far as the Dow goes, so we got above the 61.8 and failed, and now we pulled back to the 50% fib. We bounced off of it twice, and now we're technically on a third time. Until we get over to the 61.8, 351.62, so 351.63, I'm going to use a little bit of an audible. I'm just going to say the Tuesday high, so 351.05, so 351.06. Because if we clear that, we really should go, right? And no need, I think, to really stand on ceremony to get over, the 61.8. Because I think if we took back all of the Tuesday weakness, we're going to go. So, but bears need to break the 50% fib. If they do that, I think we come back down here to retest the 50-day moving average in the 20 MA, which kind of seems like almost like a fait accompli at this point, given that we bounced off this so many times. A failure, we could come back down there, and then we'll see. If we lose 340.57, which is the 38.2, I think the market's got some real problems. And that's kind of my must-hold level here. But shorter term for immediate direction, it's long over Tuesday's high or short below Tuesday's low. I mean, it's really that simple because it's right between the two major fibs, the 61.8 and the 50%. As far as the Qs go, $4.62 on the DIA. As far as the Qs go, the expected move here is $7.27. Now, the bad news for the Qs is that we are up near the channel high here as far as the money flow, and we're starting to bend back over. We're not overbought, so it could technically go back higher, but it is up near where a recent high had been. And we also are into some price resistance here, just shy of the 61.8, but right around the 200-day moving average and the 20 MA on the weekly. And look where we stalled on the Monday rally, right at the 200 MA. Interesting, the Qs, unlike SPY, didn't have a look above and fail. They didn't make a higher low. I mean, they didn't make a higher high, and they dumped and were below the 10 MA, which is a level a lot of swing traders use. So I'm going to keep it super simple for you all. Number one, the bulls, to regain consciousness at this point, need to get back up over not only 362.88, but 363.49, which is the 50% fib. Above there, I think they were neutral to bullish. Below there, we're more bearish. Just that simple. And if we were to lose the Friday low, I think we're coming back down to the 20 MA, which had been kind of some resistance. The 50-20 MA confluence down here, closer to like 350.32. That zone from 352.81 all the way down to the 50 MA, which is currently 349.01, really then becomes the absolute must hold, or we're back into the bear market. So you can see I actually have the green here. I'd moved it over, but this, actually, let me just use the green. All right, so we'll make that green now. So this is the buy the dip area, or cover some shorts into, and the absolute must hold in my view. So we're, again, like I said, I think we'll know very quickly after, tomorrow and maybe even the Fed minutes, if we're below Tuesday's low, if we're below Friday's low, obviously more bearish. If we're back up above the 50% fib, more bullish. And then for the bulls to really run, I think they need to get over this 100 MA, 200 MA confluence up here around 369.31-ish. If we can clear there, I think it's smooth sailing to the upside, at least to 377s. But below there is, a little problematic, and the expected move is $7.27. It's interesting. The SMH had this huge bid on Monday, and then on Tuesday it just got slizzammed. And this is even weaker because we're below the 50% fib of the range, and we're coming in on the 61.8, and we're below the key 20 MA, which I have marked off here. So I'm going to be a tough taskmaster on a lot of these longs here because, I think the market has a lot to prove. So I think the bulls really need to take back the 20 and 50 MA, and I wouldn't really get long SMH. And I know this is going to be tough for a lot of people to kind of swallow, but it has to clear the Tuesday high of day. I'm going to be real tough on it. It's got to clear there. If it can, then I'm down for long, but anything inside this day's range to me is chop, and anything below is more bearish. Would I be a right or right out buyer closer to the 78.6? Yeah, probably, because that's near some reference lows, but only for a bounce. And if you take a look at SMH, it's been weak. The only reprieve day was Monday, and it was sort of an inside day, and then we lost that low of day. So if there is a bounce here, like let's say you bought SMH, I would set an alert here at, or if you're looking for short, at 265.23, because I think that zone is going to be resistance. Because it was support, it'll become resistance. So 265.23, I'm going to say row short if we get a early bounce, particularly at or above. All right. So I'm thinking if we do get a bounce up here, that would be a pretty big bounce, but I do think it would be at least for a day trade, right or right out short. Micron, we almost filled the gap. We bounced a little prematurely, but this to me still looks weak. They had that report, the earnings was up, and then it reversed. This is, again, the bad market dynamics, right? When something is up initially and then it sells off and it keeps selling off. So I'm not loving Micron here, to be frank. If it got over the 200 MA and held, I'd play it for a long up to the 50 MA, but just about it. That would be about it. If it already reported, there's going to be no catalyst, in my view, for it to go higher. Taiwan Semi has probably got a little relief because of the situation with China, but we're right on the gap fill. And they do have earnings coming up. So I want to see this break trend before I get long. And then if I were to get long, I'd probably put in pepper out some orders up here between 115.90 and the 100 MA-ish area around 117, because I think that gap fill area would attract some initial sellers at the very least. And then if we are weak, we could come down to the channel low around 92, because we're still in this sort of channel. So I want to see the down channel and downtrend break before I get, interested in long. And then this stock, is it just, one day if we wake up and Taiwan is under siege, it's going to have problems. As far as Nvidia goes, I had a lot of people asking me about chasing the dragon on this the last couple days, and my answer was I'd probably not. And here we are, down right to the 20 MA. So this is the interim support. If the 20 MA fails, it's short down to the 50 MA. I'd probably try it long for a trade at the 50, 200 MA-ish area. I'd certainly be covering shorts into there because that's the backside of the old trend, downtrend. But it's got to hold the 20 MA here. If it can, it's sort of right below there. I think it gets the 50 MA pretty fast. The 20 MA currently being 257.19 and the 50 MA currently being 246.78. Let's take a look at Avago. This is sort of the honey badger. This is some company, man. This stock is just unbelievable. It got the 78.6 and now it pulled back to the 61.8 and with the 20 MA. So this is do or die here. If it fails, I think we come back down to the 50% fib. And you see I have my alert set there because you have a 50% fib, the trend line, the primary trend line, and the 50-day moving average all lining up there. So I'd be covering shorts if you do take it below, the 20 MA, which is currently 611.09. I'd be covering here and reversing long for a bounce. If you don't want to be short, just have an alert here, and this, I think, could be a good day trade for a bounce. We'll see. As you have multiple technical points lined up there. I'm long XBI. I was really loving it the last 2 days, and then today not so much because it took back a lot of the gain from Monday. It took back all the gain from Monday. I still think that this will eventually grind higher. This seems to be the pattern. It has a move up, a couple of moves down. It's sort of like one up, two steps up, one step down or so. So I do eventually think this works its way a little bit higher, but in a dicey market situation, you got to be a little careful, particularly with any of these things. This is one of my few longs that I still have on. Arc Innovation. This is Kathy Wood. So, you're right on the 50 MA here. Maybe for a day trade, I'd try it long off the 20 MA if we get a dump, because that was the big resistance. It should technically now be support. But these stocks are tough to own. It didn't even bounce to the 38.2, which shows you how weak this thing still is. So if you want to be long, I'd try it row at the 20 MA, but it's really not so great here. It may need to build out a little bit more. One of her big holdings is Tesla. And I had a lot of people asking me about chasing this the last day or two, and I was saying I thought it was a good opportunity to book some profits into the 78.6 and above, and then sure enough, today we sold off. Then I had spoken to a few DM subscribers, and I said use 11.27.18 as a stop. And if you use that, you're fine. Now, what now? Where would I buy Tesla on a pullback here? Well, they do have earnings coming up, and it ran a lot, so, I think their numbers are going to be good, but I don't know that it didn't use up a lot of that rally, and we know that they're doing the split. It's a little weird that they announced the split ahead of time, but we do know their deliveries were good. If this loses the 10 MA, it's probably going to really start crapping itself. I'd probably be a buyer closer to the 20 MA or the 50 MA if we get all the way down there again. I don't know that we will. I'm guessing this may pull back and fill the gap, and that might be it for now. 10.64-ish. We'll see. But it really is still holding up okay. If we do get over the 78.6, the chance for 100% retracement into the 1200s becomes likely, but this moved a lot. I think it just needs a little time to kind of work things off. So Twitter. Originally, Musk sounded like he wasn't planning on getting as active, but now he's going to be on the Twitter board. So that's a little more interesting to me. But the problem for me with Twitter is a couple of things. One is that the upside risk from here isn't all that great. It could fill the gap, but I feel like I already feel like the move is it could go higher, but the risk reward isn't so amazing here because the channel high is 60 and the gap fill is 61, and you're coming up from the bottom. So another pop, yeah, maybe. When they report, and if the stock gets nailed on the report, I'd be a buyer, because now it has the Musk put, in my opinion. Like, we used to have the Fed put, now it kind of has the Musk put. If this fills the gap, which it may, I don't know that it will. And it doesn't surprise me that it was strong a little earlier today, given, not everyone got the news, that Musk was involved, and there's usually like a little follow through the next day. Just a little worried about their numbers, because Twitter is a crappy company. I'm sorry, it just is. They don't make really very much money. So if they have a crappy quarter, I'd be more interested in buying the dip lower, because I think a crappy quarter would give Musk more power to enact the changes he wants, as opposed to if the stock is strong. But I mean, Musk really, I think now kind of owns these guys, in the sense that, he's the biggest shareholder, he's going to be on the board, and if he signals that he's no longer interested in the stock, I think that would be very bad, and the stock would not only give back all the gains it had from, his buy, but then some, and the stock could be back in the 20s. And a lot of these companies, you've got to keep in mind, they pay their employees with stock options, and they've got to be bleeding underwater here. So Musk threw them a huge lifeline, so they really, I think they want to embrace him and keep him happy, or else, their compensation is going to have problems. So I do like Twitter on dips, though, now, but I don't love chasing it. Amazon. So this rallied up to the 61.8 a couple of times and pulled back. The 100 MA, let me get rid of this here, is the must hold. It's roughly, no surprise, the 50% fibbish level. So that must hold. To get going still further, it's got to clear the 200 MA and the 61.8 at 33.5909, but it's run a lot into numbers. I don't know. I'd be a little careful here. Could they keep running it into numbers? Maybe. But if they keep running it, it gives the... what I'm thinking happens, and I could be wrong, is that it maybe gets a dump on the number, and then it gets bought up right away, because we have the 20-for-1 split coming up. So if there's somehow a pullback to the 50 MA, which had been resistance, I'd be a buyer there. All right, so we got up basically to the 61.8. This was a sell level. And it's probably a good area to still book some profits into. But I would be interested in reloading on weakness. So Apple, they ran this thing up for the end of the quarter like a bat out of hell, and it got right up to the channel high, and they pulled it back, and here it was rallying again, and now they pulled it back. So I still think Apple is a good sale up here. Why? Because could it keep running a little more? Yeah. But it's at the channel high. I know you got Worldwide Developer Conference coming up and all that, but I'd be careful here. This was clearly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost 12 days straight up. This was clearly end of quarter markup. It's near the highs. I think the risk reward up here is a little iffy. I'd be careful. It may make a new high or whatever, but coming into earnings after a run like that, that's not the shake and bake that I like to see. So I'd like to see the stock lower into numbers to get me interested in it. Microsoft. Mr. Softy. All right, so let's zoom in here. It's up against the 100 MA resistance. I like booking some profits here. This is where it broke down from. I do like this, that it's consolidating up here high and tight. And if it were now to clear 317 quarter, I'd still trim some, but I would raise I'd raise my stop, but I think it could maybe even go still higher. So I'd be more interested now on a dip in Microsoft if it could get back to like the 20-50 MA area. If you missed it, but I don't know that you need to fully bail out of Microsoft. I'd use the 10 MA as a stop though, just for good practices, best practices as they say. So 109.08ish and rising. Google, I'm still long some, but we got up to some key levels of maybe to book some profits into, and it's now really got to hold the 100 MA in my view. So that's the stop, 27.8874. If it can hold there, I think it's okay. They do have numbers coming up, and they got the split further out actually past the Amazon, but also like Amazon, I think will be strong into the quarter, but we are into the channel high. It's probably a good area to trim some into strength. Netflix. They're one of the first of the, I think they are the first of the Momo names to report, and they got poleaxed the last time. I think Ackman saved them from still lower prices, which I think is probably, I'm not so thrilled. I would have liked the stock to be lower. Now, if they rally this into the number, I think it could be problematic, but I don't think it's, I think if it's down, it's probably like one of these retest the lows type of things. I don't know that it's going to completely collapse, but am I willing to gamble and be long on Netflix, the first to report after this kind of a big down move on this in this tape? I don't know. We'll do some polling. We'll do some sentiment, because to be honest, if this really does dump again, the triangle fills are much lower, 290 and 252. And if we complete the head and shoulders, or the 2 times, it's not really a head and shoulders, but if you do a 2 times range, you're back down, a lot lower into levels that I would be very interested in buying. Now, could we be forming an inverted head and shoulders here? Yes, but this needs to build out the right shoulder. So let's see. I'm going to be the second mouse on Netflix for now. If that changes, I'll let you know. But that's my thinking for the moment. Disney's got a lot of problems. They're facing a lot of conservative backlash and boycotts over their outspokenness over the quote-unquote don't say gay bill, which is a total lie. It has nothing to do with that. It's just about not indoctrinating and grooming kids from kindergarten to 4th grade or something. Do you really need your sub 9-year-old learning about sex ed? I mean, that's up to you, but I know a lot of people are not so into that. Anyway, will the reopen boom be enough to offset the boycott? I would think so for now. So if this is weak into the number, it's probably a buy, but I think longer term Disney's got some problems because their streaming service is seemingly slowing. The multiple given to these kind of things seems to be going lower, as we've seen with Netflix, and I just don't know that Disney is going to not suffer from this backlash. Is it too late in the quarter that it's going to matter? I can't tell you. I just know we have a kind of a megaphone moving lower and a downtrend. So if Disney can clear over the 50 MA, I'd be interested in a long. But again, the 100 MA could be some resistance. I'll probably be the second mouse on Disney unless they take this down hard into the number. Then I would try it for a bounce play. But here, it just to me looks like chop for at least for a trade. If it can get over the 50 MA, then I would try it long for, maybe long into the number, but not long for the actual number. Nike, I had been long, and then I got stopped out and now short. So I'll be looking to cover probably somewhere between the 20 MA and maybe the 61.8 if it continues to dump. I would reverse and go back long again if it could get over the 50-day moving average, but it seems like, look, it popped up here, pulled back, had this 2-day consolidation above the down. There was another downtrend that I had drawn in, but I re-rendered this a little bit. Above the 50 MA, and then when it broke, that was it. I had to be out, and here we are. We're pulling back lower. So if it can run over the 50 MA, then I think we get the 100-day moving average at some point. Maybe it lines up well with the 144 breakdown. I'm not really that bearish in the play. I have a 1/2 put ratio, which I'm going to disclose now. I know I have in other videos, but I know not everyone watches every single video, even though they probably should. But I'm aware of life. I have the 130, 125, and it's 29 April expiration. So, down here, could it go down to 119? It's possible, but I think it'll be a little choppy, and then I'd be interested in covering that short a little bit lower. Lululemon got into some resistance. Nice little dubstep trade here if you want to be short below 372.28. Over the 2-day high, though, could keep going. It could press back up to close to 400. So, if you want to set an alert above 384.40, let's see, 41, say row long, And then if we lose the higher low here of 372.28, 27 here, I'll say row short. So there's going to be a trade in Lululemon regardless here. Restoration Hardware, nice bounce back today. I don't really know what the news was. Was it Buffett related? I think they're only 16 times earnings here if you believe their earnings are going to stay the same and not deteriorate in a recession. But it did hold the 61.8 a couple of times. It's got to clear the 50-day moving average. So if you're long, I think you got a hard stop below 342.76. And if you want to be short below 342.76, that makes some sense to me too. I'd probably get more into this closer to the 78.6 if we continue to drop, but we'll see. I'm not going to be that dogmatic. A break of the 50 MA, yeah, I would be interested long. Because that's where it stalled on the last earnings. That's where it stalled here. And if we clear, that to me would be a change in behavior. Home Depot, I'm still short, acting like a DOG. No real bounce here. And I think if we lose... I'm going to put an alert here. I might press this sucker if we lose 299.29, so 28. I'm going to say press the short. I have a 1x2 in this one too. Let me pull that up. I'm short. I'm long the 265 short 2 times the 245. So this would really need a large drop for this to work, but this is out in like April. So if we got down to my 280 target, I'll just cover it. It won't be a gigantic winner, but it'll be a nice one, given the way it's positioned. So yeah, that's my setup there. And ideally, I'm hoping that happens before earnings, so I can be out and not necessarily be stuck in an earnings play. Because if I am, then I might have to rethink things. Facebook is rallying. It's acting pretty well. We talked about this bottoming, and I still think that's the case. But they're going to need a good report to really, potentially two good reports to really get back on track. I think you could be a dip buyer at the 20 MA now at 213.26, but I don't know that you need to chase it up here because I do think another little more rally here to 244s or so is probably a sale. Okay. If they rally it into the number, it's potentially we get a drop, but I'd love to see it make a higher low, which is sort of the scenario I think that could happen. I know the back half of the year has got to be great for them because it's going to be the midterm elections, and this is going to be one of the most highly spent election cycles in maybe ever. So we'll see. Shopify has been more like shop or die lately. That's just too easy, right? They just give it to you. It's got to clear the 50 MA, and it's got to hold the 20 MA. 20 MA is currently 662.99. And the 50 MA is currently 756.91. They do have earnings coming up. It's come in a lot. I would like it like one more leg lower, which probably means it won't happen. But 780 was the big resistance the last time. So if you want to wait on earnings, it's got to clear 780. If it can, it could get to 889.5 and fill the gap. It got the 2 times range and the 2.618. So it is bull flagging out here. I'm sort of agnostic on it at this point. It's simple to me as this: if it clears the 50 MA long, if it loses the 20 MA, I think short. And if it runs too much ahead of the number, don't be long for the actual number. And if it dumps before the number, maybe try it a little bit for the number. How are we doing on time? Let's do booking. The CEO said that people are not acting squeamish to higher prices, which is great. That tells me the reopen is going well. The numbers will probably be good for earnings, so if they pull this back into the number, I'd be into it. But we got the 61.8 and they're backing off. You have a little break of trend. Anything below the 200 MA, we got to be careful. The upside here is probably just to the gap fill, but if we were to clear that, like let's say tomorrow for whatever reason, or today we're watching this, and we clear that 2372.62, 2372.63. Oh, really? Just say row long, 2372. 0.63. This to me would be like a pro kind of move, and we would fill the gap. I think you got a quick trade there. Anything below here I think could dump back down to the 20 MA and 22899 level, which was an old all-time high. So, and fill that gap first. So maybe we fill this gap and then fill that gap. But I like booking on weakness, given the comments from the CEO. Airbnb, I actually said goodbye to au revoir, right? It's like Pee-wee's Big Adventure. Au revoir, Simone. I did it here up near the high of day, actually, into the close. And I was a little pissed off in the morning that we were rallying. I was like, this is going to get to the downtrend, but I was pretty happy by the end of the day. Now we're near the range low, near the 10 MA. Would I reload here? I don't know. I think they're doing well, though. I do think they're doing well. I would be more into it closer to like the 20 and 50-ish MA down here. If we get a pullback, like this zone here, I'd be into reloading if we can get back down to there. Like 161s. I don't know if we're going to or not. Or wait for the downtrend line to break. If it can break, then, you know, maybe we fill up the triangle first to 191s, and then maybe the gap fill here, and then maybe even all the way back to the all-time high. But it's clearly flagging out here. I want to see one of those two scenarios happen, a pullback or a trend break. And the last but not least is this Chipotle, which was acting really, really well in today's session. Got dinged a little by the close, but it's above the 100 MA and it's above the breakout at 1579.52. If that can hold, and it's also the 10 MA, I think it's sideways to higher. If it breaks, I think it pulls back maybe to the 20 and even to the 50 MA, which was the old resistance, which now should be support. So if you short it below the low of day, you could cover it and then long it up here at the 50-day moving average at 1503. Would I do it before earnings? It's a tough one. I have a long history with Chipotle, and it turns out I don't really trade it very often. I do trade it sometimes, but it's usually not into earnings, just because I one time got burnt very badly and had an $18,000 loser on a trade that was supposed to just be like a little strangle play. Oddly enough, the stock went a ton lower after that, and I had gotten out pretty well. I risk managed it, but I mean, if I would have just held it, obviously, it would have been fine by now. So 50 MA would be a buy for me. If you're currently long or trying it here, just use the 10 MA as a stop at 1579.5. 50. So have a great rest of your week. I will have an update for you post-Fed minutes. I might even do a live video tomorrow, depending on how my skin looks and if I'm having a good hair day. I'm only half joking there. The skin I am a little more sensitive about. The hair day, I just put on my hat. But have a great rest of your week. I'll see you. Cheers.